Two, one, and it is recording. All right. Hello, everybody. So we have KV from Ilrion Options here. I already messed up talking. KV, glad to have you on, man.
Nice having you here today. Thanks to everyone that is watching us as well, and thanks for inviting me, Jackson. Looking forward to this talk today.
Of course, of course. So, for the viewers' sake, KV, we already went over this beforehand, but for the viewers' sake, I have a list of questions here. They were not sent to KV beforehand. Um, so yeah, unscripted, uncut. We'll just dive right into it, and also, I guess a little bit of background too. So KV and I, we've met what 2020, 2021.
Early 2021. Yep.
Yeah, yeah. So we've known each other, a couple phone calls here or there. We're in similar spaces, and then I guess we've just been following each other on Instagram ever since. And then asked you to be on the show. You said yes, and now here we are. So, with that being said, first question, we'll keep it light. So, personal background, how you got started with your trading club, how you got started with trading. Can you go into a little bit of that?
Yep. So a cousin of mine, back when I used to live in Europe, introduced me to stock when I was 15 years old. That's almost 9 years now. Um, I was good at math. I was good at numbers, but I was like, I cannot do math as a profession. It looked too boring. So I was like, I have to do something with numbers. Stocks had numbers in it. Looked, money wise as well, very, very financially okay, right? They could lead to that financial freedom. So I was like, okay, let me give this a try. Obviously, at 15 years old, I didn't have any capital, didn't have any knowledge. So I just started absorbing as much as I could, either from the internet or just reaching out to others online as well. That was the first time I got introduced to it. And then since then, never stopped literally learning about the stock market every month. I wouldn't say every day because life sometimes gets in the way, but every week, every month since that time. The market has changed a lot, but my journey really went through college as well. I decided to go for a finance degree, graduated um, with an very very good grades, 3.8 GPA, and I was able through networking, and this is what we're doing right now as well, networking, right? Me and Jackson know each other for almost 2 years, more than 2 years now. Um, I highly encourage everyone to do networking. I knew no one when I moved to New York, and I landed the job on Wall Street as a sales and trader on one of the investment banks here, just through networking. Um, Coffee chats with people, just literally cold outreach on LinkedIn, grew my connections on LinkedIn 500 plus there. So I was like, okay, I just need one yes to get my foot in the door, and that's it. I was able to do that. And then through that journey, as well, I was getting my job into investment banking. I was also learning trading on the side. And in college as well, I was introduced to options, and that's what I do right now, options trading. And at that time when I was working in corporate, really built up my capital. I had the knowledge. College didn't really teach me much about trading. Neither did my job, because my job was mainly institutions. So our clients were mutual funds, hedge funds, right? So it's not much what we do right now as retail traders, but it opened my eyes. Okay, how does it look like on the other side? And with that capital, was able to go into day trading. Obviously, rough start, right? But it takes time. It takes time, and I tell people it's going to take. For some people, it takes months. For some people, it take might take years as well, right? For me, it took years just because I started early. But if you go and absorb the right knowledge in the right time and have capital, it shouldn't take that long either. If you have realistic goals, most people fail because of those unrealistic goals.
I heard that. When I first started trading, I was like, oh man, this is gonna be easy. Get $1 million, no problem. I actually have three questions that aren't part of what I was going to ask you here
Okay.
listed out, but what you said. First off, what part of Europe are you from?
Albania. So that's Eastern Europe for anyone that doesn't know, because it is a small country. It is literally neighbor with Greece and Italy. So if anyone has seen Greece beaches, it's exactly the same. Cheaper as well. So if you're looking for a holiday this summer, it's the spot to go.
Nice, nice. And then Do you still work with a firm, or do you strictly just do your trading club?
No, only my trading. Back when I was working as well, we weren't allowed to day trade. So, if you're working for an investment bank, because we had insider information, every trade that we did at least had to be held 30 days. So, if you're holding something for 30 days, obviously it doesn't count as a day trade, right? Um, you could have done, long-term investing. Yes, you would still have to report that. To the company. And obviously, there were certain stocks and companies that we couldn't trade, so or invest in, right? So I couldn't do it even if I wanted to. Um, so I had to split ways there.
Interesting, interesting. Okay, so now to the listed questions, right? And you said you started trading in 2015.
L- Learning, right?
Learning.
Learning about trading in 2015.
So, what was the implication on the global pandemic, and how did it change your investment strategy since obviously pre-pandemic?
Yeah, look, a lot of people these days that are trading, they started during the pandemic. Luckily for me, I started way before that, so I kind of knew, okay, this is not the usual market. During the pandemic, especially after we saw that dip, after the dip, it was a bull market, a crazy bull market. Whatever trade you went in, it was gonna go your way. People are making money left and right. 80%, I would say, I'm not sure exactly on the percentage, but 80% probably of those people lost all of that capital back these last 2 years. Um, and why did that happen? Is because the market is always changing. And I've told all of my clients, members, that this past year or 2 years, right, the market has changed more than I've seen it ever change before. Like just last year, I've had to adapt my strategy 3 or 4 times, and it's kind of with cycles right now. We do good for some months, and then there's a slowing down period where the market is kind of in a steady sideways market, which doesn't help us as options traders. And that's where you kind of have to take a step back, understand the market, maybe decrease the risk as well, and try to adapt to that new price action because it has been changing. And that's what I've tried to do as a leader is, okay, this is how the market is right now. What can we change in our current strategies to help us make better trading decisions, to help us, perfect those entries and exits, which are not going to be 100% correct all the time, but at least get to as high of a win rate as possible while still managing the risk. But the key word is you have to be adaptable. It's a must.
Right, makes sense. Makes sense. You have a strategy when things are going well, when things aren't going well. How's that strategy going to work? It obviously has to change.
Right. Yep, and adding to that, I would recommend everyone to keep a trading journal. The trading journal is what is really going to show you, okay, do you need to start adapting? Do you need to take a step back? Or are you good to start scaling? Um, Without the trading journal, it's just you and your head, right? You're just telling yourself you're getting better, or you're telling yourself you're getting worse. But unless you have those numbers there, and numbers, there's the saying as well: men lie, women lie, numbers don't. The numbers do not lie to you. That's what is going to show you, okay, you're performing better, or you're not. So I would recommend everyone to keep one.
Are you able to go into a little detail on what strategies you've implemented since then? Like maybe like the latest one you've been using.
Yep. And in terms of strategies, I would say, comparing it with the COVID market as well, breakout used to work really good. You would enter a breakout, you would wait for a specific level, to the upside or downside, because if you're trading options, you can trade either way, and wait for that breakout to happen, and you would have your price targets where you can scale out of the position. In this current market, those breakouts are not working. Those breakouts are not working because the market is not as strong to have those follow through movements. So right now, it is better for you to enter on those bounces or rejections when you see those failed breakouts happen, rather than waiting for a day high break or a follow through play, because those are not working. And yes, it's more difficult to enter the bounces or rejections because you're like, okay, it's coming back down, but maybe it's a pullback, right? So now you have to identify, is it a pullback or is this a rejection play? And that's, I would say, the most difficult thing right now. But if you're able to capitalize on that, this is the market we are in right now.
Cool, cool. This next one's pretty fun, pretty relevant here. So, what are your thoughts on the SVB situation?
Yeah, so I actually made a real video on that as well, and it's it just blew up like crazy because everyone is looking at that current situation, and everyone's eyes right now is on the financial sector. No matter if it's retail traders, institutional traders, traders that have been trading for 20, 30 years, all the eyes are in the financial sector. And this is where we start that adapting phase as well, right? Because sometimes it's the tech sector in focus, right? Sometimes it's the energy sector in focus. Right now, it's financials. People are waiting to see, okay, what's the impact that this SVB crisis, I would call it, is going to have in the market. You had that happen. And then you had the follow effect with Credit Suisse in Europe. If the National Bank of Switzerland didn't inject money into Credit Suisse, that would have failed as well. And Credit Suisse is big even in the US. And then we had this morning First Republic Bank, right? The same thing. First Republic Bank was going to fail. The big banks here in the US helped that and then injected money in the First Republic Bank. But how long will this continue, right? So you're saving one after the other, right? But which one is going to fail? We have SVB this morning filing Chapter 11 bankruptcy, right? So they're just filing that bankruptcy, waiting to see, okay, what's going to happen with the bank. They might put it back on or not, but it's crazy times. And I didn't go through the 2008 crisis, but it's something similar in terms of what's happening. Just let's see what kind of effect it will have on the markets. We're seeing already a fear, I would say, from people. And I was reading also today, what's the impact? And you really have to deep dive into this. What's the impact of people now taking all of their capital, all of their deposits from the community banks and putting it into JP Morgan, Bank of America, right? What's going to happen with these small banks now where everyone is taking the money out because they're scared? Because they're like, okay, JPM might be too big to fail. So let me get my money out of this small bank and put it at JP Morgan. And we're seeing a huge deposits in the big banks, right? JP Morgan, Bank of America, the two biggest right now that we're seeing those deposits. Other ones haven't reported yet, but it's definitely a shift happening. Your money is basically not safe anywhere right now, even though some banks are too big to fail. You never know what's going on those backgrounds and what's the liability that these banks have.
It's scary, man. You think this could be the beginning of something pretty big?
It is because a lot of this liquidity from these, especially like SVB. So for people that still do not understand the situation, basically what they did is they had a lot of deposits. So what do they do? Because they have to keep that money running, right? That's what the bank does, right? If they don't keep that money running, then how they're going to pay their rent, how they're going to pay their employees, right? So they have to keep their deposits, put them into somewhere else where they can get a capital out of it. So what did they do? They bought 10 years treasury bonds, which is a safe asset, right? But it's 10 years. Now that customers want their money, the money is locked in those 10-year treasury bonds. So when we talk about risk management, it's not just as traders, right? There's risk management that these banks have to do as well. And that bank specifically got caught up in a unlucky situation where there was a lot of requests in terms of withdrawals. They couldn't make that happen because the money is stuck into those government bonds. And this is the situation. So sometimes, even when banks get those large deposits, if they don't manage that properly, sometimes it's not even good for the bank either.
Makes sense. Yeah, makes sense. Follow up question to SVB. Were
Yep.
you able to capitalize on any of that?
On SVB, we have been capitalizing on the other financial stocks. So I used to trade BAC, so Bank of America,
Mhm.
heavily. That was my top one performer. And then last year it was slow. There was nothing much going on into financials. Right now, this current situation, the liquidity is back on, the volume is back on. So that's what we've been focusing on since the SVB happened, because it's very risky to trade these other banks. Like if you try to trade the First Republic Bank, FRC, there's so many times during the day that gets halted. So the stock pauses. You never know when that opens back up, or if it ever opens back up, right? So I don't like to get myself into those scary or uncertain situations. We have Bank of America. The options on it are liquid. They have volume. The chart moves well, and that has been our focus right now. If you just want to trade the sector, right, anyone can trade XLF, which is the ETF sector for the financial stocks.
Cool, nice. Yeah, I'm assuming your room is probably going crazy, or was going crazy the last couple of days about
Yes,
that.
and especially with BAC, because the options are small account friendly, so anyone can literally trade options. It's not something like Tesla where a contract is gonna be $900. On BAC, they're worth $50 to $100 a contract. So anyone with any type of account size can easily trade that. That's why there's a lot of liquidity on it as well.
Hmm. Hmm. So this one's sort of an education type question here. So say you saw something in the news, a big event happened, could even be this SVB. Um, you see something in the market and you're like, wow, I want to make a move on that.
Mhm.
Something's happening. I got to make a trade around that. How do you choose an option contract? Which one do you know to choose? There's different expiration dates, strike prices, all that. What do you look for?
So it will depend on what trade plan you're looking for. Are you looking to day trade that, or are you looking for a more long-term swing position, right? That you're going to hold it a couple of days, maybe weeks. Um, Personally, my trades, 90% of them are going to be day trades. So I'm just looking to capture pieces of those movements after the news. And I always trade after the news, even though it could be like an earnings report, and we always know where earnings report will be. I never trade before that. I wait for the news to happen, see the after effect, and I tell all of my clients is do not try to predict something from a news. Just trade the reaction. Trade the reaction that investors and traders have after that news gets published. And in terms of selecting strikes, um, because I'm focused on that day trading and capturing those small movements, I usually go with the same week expiration and at the money contracts. So the closest strike price with the current price. If something is trading at $120, if you have a strike price at 120, that's what I'm going with, because that will give us best combination of, and I don't want to get too technical, but it will give us the best combination of delta and gamma, which are the two first Greek letters that will affect your option premium, especially if you're trying to catch those big moves. So either it's a calls or puts, it will be at the money, same week expiration. If you want to decrease the risk, you can go with next week expiration, but usually we're going with the same weeks.
Cool. And feel free to go complex. We'll have wealth managers on here in the future as well. But it and for me too, most trading talk goes over my head. All good. So don't feel bad. Yeah, if you want to get complex, technical with it, yeah, feel free, man. This is the show to do it.
Got
I might just give you that blank stare.
it.
No, but um, are you fearful of the bond yield inversion? Sorry.
Fearful. I wouldn't say I'm fearful, because we've been seeing that inversion happening a couple of times. We saw it happen last year. Everyone was like, okay, it's inverted. The stock market's going to crash. Nothing happened last year, right? Um, so it has been an indicator in the past, right, in history, that, okay, if the bond yield gets inverted, then, okay, we can look at for a potential recession. Right now, it's not as big as an indicator, and that's where we go to manage to being adaptable as well, right? This current market, right, what are investors looking at? During COVID, everyone was looking at COVID numbers, right? Deaths and all of that. um, we had a big look at CPI as well. Even CPI right now is on focus as well, right? Because that's what we're trying to maintain. But this is how we as traders adapt to, okay, what is the main focus that the market will react right now? If you were watching economic indicators these last 2 weeks, the market really didn't care about anything except to how the financial stocks were performing and any news that was going to come out from the Fed or from any of the banks. That was the main focus. No indicator, and we had a lot of indicators this week: home sales, um, a lot through the week from Monday to Friday. Like there was a lot going on, consumer sentiment and all of that, and it didn't have much impact on the market because investors are just okay. This is our focus right now. This is happening, yes, but it's not going to have a huge impact on the market.
So almost like other news took the wheel essentially, right? And this kind of
Exactly.
got pushed to the side. No one cares for the time being because I have written on here literally right next to it. Many firms believe this is a strong indicator of a looming recession, but I guess since everything else is going on, they're just like,
Yeah,
what? And then the money's over there. So then it's like it almost keeps it up. Would that be correct?
that's what's happening. And in terms of the bond deal as well, it's a good investment right now if you're looking for short-term gains because you have your 6 month. I didn't check what it was today, but you have your 6 month treasury rate. Last time I checked was at 5.4%. So you're guaranteed 5.4% in 6 months by the government, right? Why would anyone try and mess with the stock market if they could get 5.4% in 6 months, where everyone is trying to get the 10% increase yearly, right? So if investors are like, okay, I'm just going to take my money out of the market, put it into a safe asset, right? A bond is a safe asset. 6 months, it's guaranteed. That's what a lot of people are doing right now. And the only way you lose that money is if the U.S. government defaults. So far, it hasn't happened, but if you're that unlucky that the government defaults when you're in bonds, then that's a different situation. But that's right now that is considered the most safest asset. And this is how you can turn that inverted yield into a trade idea as well.
Interesting. Interesting. Um, okay, a little bit of a longer one here.
Okay.
Do you think the risk of using options or futures in your tax advantage accounts is worth it compared to, say, a target date or index fund? Which I think you might have already answered that a little bit.
Well, it's two different risks. It's two different risks, right? Trading options and then investing into indexes and all of that, right? Um, what I recommend people do, right, if they have the capital and time to day trade options, is if you're consistently profitable, take that money from that day trading and put it into either a long-term index fund, right? Something that is going to be passive because you cannot be day trading all your life. You can if you want, but it's going to be stressful. It's a lot of pressure. So your energy will slowly fade as well through the years. If you use that day trading capital with other long-term investments, it's the best.
It reminds me of that meme where it's like that picture of that old guy, and it's like, this is Jeff. He's a 30-year-old trader, and the guy's like 80 in the picture. And it's
Yeah, look, it's I tell everyone if you start day trading, it takes a lot of nerve. Like you're gonna get gray hair
Mhm.
much quicker, just because there's a lot of pressure, especially if you're trading weekly expiration contracts, which are volatile. Like the amount of energy is required and patience that is required is totally different from a long term investing.
Right, right. Hey, it makes sense. I even paper trading. When I first started out as paper trading,
Yeah.
man, I would get in a trade. I'd be sweaty. My hands are shaking. I'm saving real money. Like, what am I doing? Why am
Yep,
I here?
and it comes down to the psychology aspect as well, right? Um,
You want to win. Yeah,
you can learn all the technicals. You can make a perfect trading plan. The market opens, you forget everything.
yeah,
So you don't want that to happen, and that's where it comes the knowledge, the experience through time, right? You have to work on your mind the same way you work on your trading setups, and a lot of people don't understand that. Hence, why a lot of people try perfecting their trading strategy, and it never works, just because they might have a mindset issue, not a charting issue.
yeah, yeah. 100%. It's actually funny. Another quick little story too. when I first started trading, I was sitting there and I'm listening to a guy. He's on the mic, similar to your room, and we're talking through a trade, and I'm like, okay, I know what I'm going to do in my mind. Like it was, it was bouncing in the levels. I was already in it. He was like, it's going to break out, and I was like, all right, great. I'm going to sell the breakout. And then I had this other guy, some random kid, like wasn't even like an admin or anything, in the room, and he's messaging. He's like, it's not going to do it. It's going to fail. And I was like, oh man, you know what? Maybe he's right. He's probably right. And I sold, and then it broke out, and I was like, "Are you kidding me?" Like, I knew what I was gonna do,
Yeah.
but then you get
Hmm.
in my ear, tell me something else, and I listen to you. I let you get in my head.
Exactly. Yeah, we try and do that because of the lack of confidence. So going back to the trading journal, if you keep a trading journal and the trades that you're taking are profitable, are consistent, your confidence goes up. So you're less hesitant when you're entering positions that way because you're like, okay, I know my numbers are right. I know my strategy is working. It's being consistent. And that's where that confidence comes up and everything. And your execution gets better for sure.
Like a machine. That's what you wanna do. No human side to it.
That's what you want to do. I tell people, you become a trader the moment you detach yourself from the dollar value. It's all numbers, and they have a dollar sign in front. Can you just remove the dollar sign and just see the numbers? It's difficult, but that's the moment it happens.
Yeah. So we're approaching the 26-minute here. I'll start to do some of the sign-off questions here, but anything, exciting and new for your community? Any projects you're working on?
Yep. So we recently just released one of our new algorithms. What I mean by algorithm is through the years that I've been trading, um, a lot of stuff can be automated, and that's what I've tried to do with my strategy and my community is try and automate some of what we do, some of the charting. So we have automated a lot of things. We have automated levels, and right now, recently, we just released a new automation, and you could just input that into your charts, and it will help you capture those bounces and rejections that we talked about. And that's where it comes down to that adapting, right? Okay, you have to adapt the strategy, but also can you adapt the tools that you're going to need? So that's what we're doing right now. March is actually the first full month that I'm going to be using it personally and some of my coaching clients. And then if we see the results, and so far the results have been great for a full month, we could release it to the general public as well, so everyone could use it. But great tool to use to capture those rejections, bounces, rather than waiting for those breakouts, which you, if you guys have been trading, have been failing a lot lately.
Man,
It's
I wish I knew you had an algo. I would ask you some algo questions, but sounds
Yep,
like it's new though. Hey, I'll let you guys do your thing, and then we'll
yep.
have you back on in the future when it gets released or
Yeah,
something.
this is my third one. And fun fact, back in my not even high school, probably like middle grade, I wanted to become a programmer.
Oh
So
yeah,
yeah, that didn't happen, but still all of the algorithms that we do, and as I said, this was a third one. Um, I'm the mind behind it, and I'm also coding them myself, just for a fun project, which obviously helps as well in the trading aspect.
nice, nice.
I have to understand the code so I could best use it and utilize the trading aspect of it as well.
Coding's hard, man. I
It is
try
hard,
at it.
but if you make it fun and you know what you're doing, right? It's not as hard. Maybe if I was coding a website or something else, which is boring, maybe not. But when I'm coding something that okay, a result might come out of it, right?
Yeah,
It's fun, it's challenging, and it's rewarding at the end.
I'll have to get you and Chuck in the same room again.
He's the mastermind behind your coding as well.
Oh yeah, yeah. I don't know how to do any of that. All the code's him. I just do the podcasts. So, can the viewers contact you, and if so, where? And can they learn more about what you do?
Yep. So easiest is just Instagram. I reply to everyone, and when I mean everyone, everyone of my DMs. Some people are gonna say, "Is this a fake account?" Because we reply, but we reply to all of our accounts. So either Illyrian options or Trade Like KV. Either one of those, you can contact us. Any questions you might have and inquiries, more than happy to help you guys. just a side note, when you follow us, a lot of fake accounts will follow you back who are trying to impersonate us. So just follow the main account. No underscore, no dots, no question marks, nothing like it.
It has to be said. There's a lot of spam out there, man.
It's a lot happening. I don't, and most of them do crypto. We focus just stocks and options. So if you see any of my accounts talking about crypto, it is not us.
Good to know. Good to know. Well, hey, KV, it was a lot of fun, man. This is a great episode. I think a lot of good information was said.
Yep. Thanks for having me here. Hopefully, some of the listeners and viewers learned a few nuggets from this podcast that they could put into action as well after this. There's a lot of motivational podcasts. There's a lot of information online, but try and get the nuggets that you could implement as action steps.
Hell yeah, man.
The motivation only lasts a couple of days, so the action steps are gonna do something in terms of your trading performance and so on.
Yeah, motivation wears off after you lose a trade, and then you're like, all right.
Yep.
With it. All right, I'm gonna hit stop now, but thanks, man.